Let's talk to Ryan Littlestone. He's a trader and analyst at ForexFlow.live. Very good morning to you, young Ryan.
Good morning, Nick.
Right, let's talk about two currency pairs. Let's kick off with your first slide. We've got cable, the Great British Pound against the US dollar, a 4-hourly chart. Last time we spoke, you were thinking bearish things on this currency pair for the next couple of weeks. Is that still the case?
I think so. I don't like to blow my own trumpet, but it dropped sort of 200 pips literally hours after we had that conversation. But that even surprised me, the speed at which we saw that drop. I think we were up at 141 when we were chatting, and dropped all the way down to 139.50 odd, and carried on going. I was looking at 138, 139 as sort of level where it should maybe bottom out, and we briefly blew through that as well, through into 137. Why it went is the question. Markets were a bit jittery that time anyway, but we did get those comments from Barnier, and they weren't very positive, pretty much saying that they've heard nothing from the UK regards to what they're doing about future trade deals or everything else, and that negativity seeped into the pound, and that's what I was expecting, and that's what we saw, and here we are, and the picture hasn't changed. We probably have come a bit far too quickly, so we may see some stability, but I still think this is a bearish market. Okay,
so we're going to stay on the bear tack this week. Let's move on to the daily candlesticks chart, the US dollar against the Japanese yen. Again, we were talking about these trading boundaries, trading the range. That still looks pretty range bound to me.
Yeah, but what we're seeing is we're not seeing huge bounces from the lower levels, from these 108 levels,
right?
And that's a warning signal. When you're looking at trends and whether a market's bearish or bullish, you look at the ranges. We've spoken about this range before, and I've always got my eye on these low 108 levels. We had a test on Friday of 108. We've got the pivotal 108.50 area. Which sometimes holds, but if it breaks, then we see a further dip. What I'm not liking about this chart is that, as I say, we're not bouncing too far, and people are saying, with bonds changing, that higher yields equals higher dollar, and the US economy is doing well, and that's all well and good, but we're not seeing that reflective in dollar FX, and when that's not happening, you can only flog that horse for so long and keep betting on a long dollar. And all you're doing is seeing it go lower each time. So I think there's quite a bit of support coming in from maybe some institutions around the 108 area, sort of importers and that sort of thing. But we've heard comments that they might be in, and they're going to smooth the fall. So I don't think we're going in a straight line down, but we're definitely again in a sell the rally phase.
Understood. Okay, so basically higher lows for you this week.
Yeah, pretty much, or lower highs as well.
Yeah, no, it's well, again, it's range bound, isn't it? And it's a question of whether this key support's going to hold. And I guess the final thing to say on that is it's a third attack on these areas. And when the textbooks would say that normally on a third attack, they normally go through, don't they? So we should.
Yeah, it's one thing I look for. If saying knocks on the door too often, at one point it's going to be let in. I don't think we're going to see perhaps a volatile move, but it depends what's building below the 108 level. And if we start hearing about some big stops building below there, then we might get a big shakeout if that level goes. But until then, 108, we keep knocking on the door. You might want to look at a long from that 108 area if we do get a secondary test. I'd expect maybe support to start, if that level's going to be protected well, I'd expect support to start building sort of 108.10, 108.20. But if we hang around down there, come back down there too quickly, then it could be trouble.
Understood. Ryan, as always, thank you. Thought-provoking as always. That's Ryan Littlestone.
Thank you.